The Monthly Dividend Company, a comprehensive guide to realty income. As of March 16, 2026, the global economic landscape is defined by a return to tangibility. After years of digital speculation, investors are rediscovering the value of bricks-and-mortar assets that generate reliable, inflation-protected cash flow. Realty Income Corporation, ticker O, stands as the undisputed titan of this space. Known globally as the Monthly Dividend Company, Realty Income has transitioned from a niche real estate player into a massive S&P 500 powerhouse that serves as a cornerstone for millions of retirement portfolios. For an investor today, Realty Income represents a bet on the essential economy. It is not just about buildings, it is about the long-term leases signed by the world's most resilient retailers. This deep dive will break down the company's Triple Net Lease model, its 2026 expansion into data centers and Europe, and the strategic reasons why this stock is the gold standard for income seekers. 1. What is Realty Income? The architecture of predictability. Realty Income is a real estate investment trust, REIT. By law, it must distribute at least 90% of its taxable income to shareholders in the form of dividends. However, what makes Realty Income unique is its Triple Net Lease, NNN, structure. The Triple Net Advantage. In a standard lease, the landlord pays for taxes, insurance, and maintenance. In a Triple Net Lease, the tenant pays all three. Low overhead. Realty Income simply collects the rent check. This creates a highly predictable, high-margin revenue stream that is largely insulated from the rising costs of property management. Long horizons. These leases typically last 10 to 20 years and include rent escalators, automatic price increases that protect the company's income from inflation. 2. The 2026 portfolio, diversification beyond the storefront. As of mid-March 2026, Realty Income owns over 15,500 properties across all 50 U.S. states and several European nations. While it started with retail, the 2026 portfolio is a diversified fortress. Essential retail, 75% of the fund. The core of the business remains recession-proof retail. Top tenants include 7-Eleven, Walgreens, Dollar General, and Walmart. These are businesses that consumers visit regardless of the economic climate, ensuring that the rent is paid even during downturns. 2. The industrial and data center pivot. In a strategic move that accelerated throughout 2025, Realty Income has significantly increased its exposure to industrial warehouses and data centers. As e-commerce and AI continue to expand, the demand for big-box logistics and high-tech server housing has provided Realty Income with a new, high-growth engine. 3. The European frontier. Realty Income is no longer just an American story. In early 2026, the company has expanded its footprint in the United Kingdom, Spain, Italy, and France. By diversified geographically, it captures different interest rate cycles and economic growth patterns, further de-risking the dividend. 3. Performance and Dividend Vitals, March 2026. Realty Income's primary product is its dividend. It is one of the few companies in the world that has trademarked its commitment to monthly payouts. The financial scorecard as of March 16, 2026. Current market price, chew shy $54.80. Dividend yield, approximately 5.6% to 5.8%. The track record. As of today, Realty Income has declared 668 consecutive monthly dividends and has increased the dividend for 106 consecutive quarters. Credit rating. The company maintains an A3/A- credit rating, allowing it to borrow money at lower rates than most of its competitors, a massive competitive advantage in 2026's higher-for-longer interest rate environment. 4. Macro 2026, the interest rate sensitivity reality. As your investment researcher, I must address the elephant in the room, interest rates. REITs are often viewed as bond proxies. When interest rates rise, REIT stock prices typically fall because investors can get a high yield from safer government bonds. The 2026 shift. In March 2026, the Federal Reserve has signaled a pause in rate hikes. This has created a floor for Realty Income stock price. The spread advantage. Because Realty Income has a superior credit rating, it can still find profitable deals by borrowing at 5% and buying properties that yield 7%, a spread that smaller, less stable REITs cannot achieve in today's market. 5. Critical risks. What to monitor this week. Even the Monthly Dividend Company has risks that you must evaluate. Retail disruption. While Realty Income focuses on essential retail, the long-term shift toward e-commerce remains a threat to physical storefronts. The company must continue its pivot into industrial and data center assets to remain relevant. The size problem. Realty Income is now so large, a market cap of over $48 billion, that it must buy billions of dollars in property every year just to move the needle on growth. This law of large numbers means that explosive 20% growth is a thing of the past. You are buying it for 4–5% steady growth. Tenant concentration. While no single tenant represents more than 4% of total rent, a major bankruptcy in a sector like pharmacy, e.g. Walgreens, could lead to short-term vacancies and pressure on the stock price. 6. Strategy. How to position Realty Income today. In mid-March 2026, the smart money is treating Realty Income as a total return anchor. The retirement favorite. Because it pays monthly, it is the perfect stock for people who need to pay monthly bills. Reinvesting those dividends during your working years and then turning on the tap in retirement is a classic high-probability wealth strategy. The value entry. The stock is currently trading at a price to AFFO, adjusted funds from operations, ratio of roughly 13x to 14x. Historically, this is considered cheap for Realty Income, which is often traded at 18x or higher. Technical levels. Analysts see strong support at the $52 level. If the market experiences a spring correction, adding to your position near 52 would represent a high-yield value entry with significant long-term upside. Conclusion. The fortress of bricks and mortar. Realty Income, in 2026, is a story of endurance. It has survived the great financial crisis, the COVID-19 lockdowns, and the rapid inflation of the 2020s, all while never missing a single monthly check. By diversifying into Europe and data centers, management has ensured that the company remains as vital in the digital age as it was in the era of the shopping mall. The verdict. You aren't buying Realty Income for a moonshot tech return. You are buying it for the psychological peace of mind that comes from a check appearing in your account every 30 days. If you believe that people will still need to buy medicine, groceries, and hardware, and that AI will still need physical data centers, Realty Income is the gold standard for your income portfolio.